Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Wednesday, September the 18th. The year's 2024. Let's talk trading. Trading with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal's. And as you know, you should always have your risk management in place. Never lose more than you're willing to lose on any one single trade. So, Walmal, how's trading this morning?
It's been a very good morning, and like I just said to you before, I'm up now. I'm up 63.6 pips for the day. But then again, I also started trading in the Asian session last night, and I figured there'd be a lot of movement just because of the FOMC decision on rates in the U.S. Coming out later this afternoon. But I've got 14 trades and 63 pips, more than 63 pips. So I can't complain about it. Although on my last trade, I was just, I could have got, from where I got out, I was, I got out with basically 12 pips. But now, if I had stayed in now, I could have been up 33 pips on that trade if I had stayed in.
Oh, man. Yeah, because I see you could have jumped back in at the launch pad at 40 and picked up another 6 or 7 pips.
Absolutely. I mean, that's the thing about trading. You know, you don't know what it's going to go and do. As long as you're in the black and not the red, who really cares, right?
Right. Hey, before we jumped on the video, we were talking about the flip-flop trades versus the bar 2 trade, and I had made the observation, well, the flip-flop trade's actually a bar 1 trade.
Yeah, it's funny that you said that because you're right about that. And I never thought about it that way, but you're right. That's exactly what it is. It's a bar 1 trade as opposed to a bar 2 trade. You know, the only thing is that with the flip flop trade, I've got a couple little additional rules. So with the bar 1 trade, then in addition to that is if I'm getting into the trade and it's already moved 3-4 pips away, that means the trade's off me. That means I'm late to the trade, or the market moved too quick for me to get an advantage there. So I ignore it and say, okay, that wasn't the trade for me. And sometimes that really comes back and you're really mad because then it moves 20 pips. But, that's not the point. The point is that's my rule because the majority of flip-flop type trades are going to move, somewhere around 5, 6, 7 pips. And if it's already moved 3 or 4, and then you got commission, and then you got spread, and when you factor all those different things in, is there enough room to make money? Maybe, maybe not, So I'd rather go and just say, you know what? I'll just go and take the safer ones and just make sure that I'm getting in at the right spot. I'm not late, and when you're not late and you get in at the right time, it just seems to me that you tend to do better. Well, the problem with not the problem, it's just the difference in the trade. But on a bar 2 trade, a lot of times what happens is when you get in on a bar 2 trade, what happens is that you've already, if you're comparing it to a bar 1 trade on the same chart, same time zone, the same time frame, what you find is that you've already, many times, already moved, 3 pips, 2, 3, maybe even 4 pips, from where you would have gotten in on a flip-flop box. And so I normally would have thrown those trades away. And
I was just going to say, right now, we've got bar 2 and bar 1. We got the exact same trigger lines.
Yeah.
Now they just moved. Right. Yeah, now they just moved.
Yeah. And so, like right now, I probably here because of what it is, and we'll get that on the 1 minute chart, 1, 2, 3, 4, 5. I would want to get above candle 5. And I'm talking about the high of candle 5 just because of the fact that it's been ranging here for a little bit. So I'd want to get above that for some type of confirmation.
For a long.
For a long, yes, sir. Yeah, and then for a short, I'm not so keen on a short yet. But but for a short, obviously, I want to get, normally on a short, on a bar one trade, I would be going short right here, right where we're at, exactly right where we're at. But because of the way it's been moving, I want to go in at below the low of what's now candle two. So I'd be looking to go short at 32.41.5. And it's just because we're for whatever reason we're starting to go into a range here. And if you look left over the previous hour, you see long periods of time where it just literally just went up and down, up and down, up and down for 5 minutes, and then it moved, shifted to a new level, and did the same thing, and shifted again, did the same thing, and it finally goes and breaks the area. And I don't want to get caught in that time frame of, you're just sitting there going up and down, and you're only going up and down by a pip or two, because then it's maddening. So then, I wind up making the decision: am I going to sit this out, or do I think this really is going to happen? And I'm just going to go and set a stop loss someplace that makes sense, and set a TP someplace that makes sense, and just literally go get a cup of coffee, because I'm too impatient to sit there and watch it. I got to go and just let it be and let it happen. So those, for me anyway, those are my only two options. It just and the reason why for me it's the only two options that I have is because the most important thing for me in terms of trading is I got to go and protect my mentality. I got to protect my emotion. I got to go and make sure that I don't, get myself, all hyped up or all upset because the market didn't do what I expected it to do, and I getting too invested into it. No, the market's going to do whether I like it or not.
Right. Because right now we've got bar two and flip flop. Well, just as I say it, we got a new bar, but they were exactly the same.
Yep, exactly. And the thing is that what we were talking about prior to the video is that I've been noticing there's a lot of times when bar one and bar two trades do line up perfectly. And what I need to do is, and I haven't had the time or the desire, but now I'm going to go and do it, is when they do line up perfectly like that, is there a better outcome? Or maybe there's a worse outcome. I don't know. Maybe it portends that it's for some reason that it doesn't work out. In other words, the reason why it may not work out is because you go into a long period of just ranging up and down of a couple of pips, and then at that point your emotions kick in, and you can just say, I'm done with this, I'm out, and you want to take in not a big loss obviously, but maybe a little bit of loss, and you get chopped up, and sometimes getting chopped up with little losses can add up. So that's something I got to go and do some research on it and figure out. But
Well, what you said about getting chopped up, I think, there'd be some traders that might go, yeah, that happens to me all the time. And then they'll come back, and if I had only, it would have been okay. So,
yeah, well, that's the thing too. A lot of times it's, I think a lot of times we get chopped up because, it's not going my way, at least for me anyway, personally. When I get chopped up, it's because I didn't wait it out. And because I didn't hit my stop loss, I didn't hit how much I was willing to lose, on a trade. We talked about that yesterday. I'm willing to lose up to 4% of my account on any particular day.
right.
That's what I'm willing to lose. And it's like, this has been going up and down here for 45 minutes, an hour. I haven't gotten anywhere. I'm just getting out here. And the next thing I know, I've taken a 2-pip or a 3-pip loss. Then I get into another trade. The same thing happens. And get into another trade. The same thing happens. Get into another trade. Same thing happens. And, and it's sort of like, why didn't you just wait? Because, eventually it's going to break out of it. Question is which way it breaks. I don't know. Nobody knows. And, and if I had just waited, then, I would have been better off. Or, you go and say, you know what, I'm getting out of here because I don't like this type of trading. And you get out and you don't go back into a trade again until you see a change in the way that the market is moving. Because when it does do that, it's obvious that it does that, and it does it for a long period of time. Look at last hour. Almost the entire hour last hour was like that type of trading. And you just say, you know what, I'm done with this. I'm going to wait until next hour. You know what, I'm going to go out, get myself some breakfast, and I'll come back. I'll come back at 8 o'clock and see what happens at 8 o'clock. Or I'll come back at 9 o'clock and see what's going on at 9 o'clock. But this is not my type of trading. I don't enjoy this. I don't do well in this. Walk away. There's nothing wrong with that. It's better to not lose money than to lose money.
So you had mentioned when we first started talking, you wanted to see it break a high. Well, it just broke that high, and it's now moved up a few pips.
Yeah. I would not see this trade is totally off me. I just don't like anything that's going on here.
Now we've got the flip flop and bar 2 lining up again.
Yeah. I think that right now the only trades I would take to talk about a bias, and I don't like saying I have a bias, but talking about a bias, my only bias would be long, just because look at the chart on a 1 minute chart. And the thing is, it's going kind of sideways, but the thing is, it's going sideways, but it's drifting, and it's drifting in the upward direction.
Right.
And that's that whole idea of that, I talk about, the slope of the candles, and, it's just drifting in that direction. And it's sort of like you start to say, you know what, even if I get into a trade and I go long and it doesn't work out, as long as I don't go and break my stop loss, it's eventually going to drift into the area where I can get out, with at least break even, if not some type of a profit. That's the one advantage. If you can spot that happening, or see that on a chart, that can really help you out sometimes.
Yeah, well, we just hit the bottom of the hour, and before then it was like pretty much green on the multimeters all the way across. So
yeah,
and we've got 102 pips on the day.
yeah, it's probably going to be a big day. Again, because of those rate changes, everybody's really, really anxious to see what the Fed is going to do. Are they going to do a quarter point? Are they going to do or are they going to do a half? Nobody knows. And unfortunately, the Fed has been, they've been known sometimes to be really surprised. There have been times when people thought, they're only going to do a quarter point of a cut, or only a quarter point of a hike, and the next thing they hit you with 3/4. So you never know what they're going to do.
Right.
Those guys sit in their own little glass towers or ivory towers and do what they think is best, and none of us know what they're going to do.
Yeah, it's kind of interesting because I put up switched over to M30 chart here on the PA simple template, with the psychological lines, and it just seems like that last hour was when we really moved.
Yeah.
I mean, and because on the half hour we had 32, almost 33 pips.
Yeah, that was a big candle.
So it's hitting 50 and coming back the other way. Oh, you know what? Fastest 15 minutes in trading's just about up. So, fellow traders, if you've got any questions about flip-flop boxes or bar 2 trades, let us know. We're happy to answer them. But always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.